Consumption function. Consumption function is the relationship between consumer spending and the various factors determining it. At the household level, these factors may include income, wealth, expectations about the level of riskiness of future income or wealth. CO, another abbreviation, is represented by saying initial consumption, which means consumption when income is zero. MPC is an abbreviation which means marginal propensity to consume. MPS means marginal propensity to save. Y, national income. I, investment. The formulas are CO or initial consumption and MPC, marginal propensity to consume. The other formula is savings equals this savings add MPSY, which is represented as marginal propensity savings national income. National income means regardless of the complexity of the accounting system, the final line of national accounts may not be reliable. For example, it is clear that capital consumption doesn't represent an easily identifiable set of transactions, and as such, it's always measured as an estimate. An investment is defined as expenditures by firms on new machines and buildings. In the table, Y is represented by national income. 150 is the constant. 0.50Y is 50% national income. C equals 150 plus 0.50Y, which is the consumption function, which means consumption function equals 150 constant plus 50% of national income. For example, if Y is 100, constant is 150, 50% national income. In order to accumulate C, you simply multiply 50 over 100 multiplied by 100 over 1 to get the result C equals 200. Saving function is similar to consumption function, except the constant value takes the form of a negative.
What is the value of the multiplier when S is equal to minus 20 plus 0.25y?
Let's multiplier equals A. A is equal to 1 over MPS. S is equal to negative savings plus MPS. S is equal to minus 20 plus 0.25y. MPS is equal to 25% of national income. A is equal to 1 divided by 25, which is equal to 4.
What is the value of the multiplier when C equals 10 plus 0.05y?
Let's multiplier equals N. N is equal to 1 divided by 1 minus MPC. Consumption function is equal to 20 plus 0.5y. Consumption function is equal to initial consumption plus MPC. MPC is equal to 0.05. N is equal to 1 divided by 1 minus 0.05, which is equal to 0.95. N is equal to 1.05.
Find the equilibrium level of national income when C is equal to 80 plus 0.4y, I is equal to 210 plus 0.11.
National income is equal to consumption function add investment. National income is equal to 80 plus 0.4y plus 210 plus 0.1y. Y minus 0.4y minus 0.1y is equal to 80 plus 210. All the y values are brought across to the left-hand side and all the constants are brought to the right-hand side. National income is equal to national income minus 0.1 y, which is equal to 290, which is the addition of 80 plus 210. 0.5 y is equal to 290. National income is equal to 290 divided by 0.5. 0.5 was brought across from the left-hand side to even off the right-hand side. National income is equal to 2.
Find the equilibrium level of national income when T is equal to 150 plus 0.02y, I is equal to 50 plus 0.8y, G is equal to 200 plus 0.08y.
As said before, all y values are brought to the left-hand side, all constants remain on the right-hand side. It is added straight to the end result, which leads to national income equals 4,000.
Find the equilibrium level of national income when C is equal to 800 plus 0.2y, I is equal to 200 plus 0.15y, G is equal to 250 plus 0.25y, X is equal to 80 plus 0.4y, and M is equal to 20 plus 0.3y.
As said before, all y values are brought to the left-hand side, all constants remain on the right-hand side. It is worked straight down until the result, national income, is equal to 4366.66.
Given that K is equal to 1 over MPS plus MPC plus MPM, MPS is equal to 0.1, MPC is equal to 0.2, MPM is equal to 0.5. What is the value of the multiplier?
K is equal to 1 divided by 0.1 plus 0.2 plus 0.5. K is equal to 1 divided by 0.8, which is equal to 1.25.
International trade. International trade is a trade that takes place between or among countries. Such trade involves exchange of goods or services. Terms of trade. Terms of trade is the index of export prices divided by the index of import prices multiplied by 100. Terms of trade, or COC, formula is index of export prices over index of import prices multiplied by 100 over 1. As shown in the table, we can see changes of increase and decrease in the COC during the 6 years.
From year 1 to year 2, the COC increased, indicating improvements in the COC. Year 2 and year 3 also shows improvements in the COC. Decreases in the COC was observed throughout years 4 to 6. Improvements in the COC indicate the country can pay its way. On the other hand, decreases in the COC indicate the country has difficulties in paying its way. Comparative advantage. A country is said to have comparative advantage to other countries if the country is able to produce more commodities than its competitors. Comparative advantage is used to determine the commodity a country should specialize in and export. Such can be seen in the table. In the before table, it can be seen that country A and country B both produce goods X and Y. Country A produces 40 of X and 25 of Y, while country B produces 10 of X and 50 of Y. Total world output is 125 before trade and specialization. Country A should stop producing Y because it is better producing X. Country B, on the other hand, should stop producing X and concentrate on the production of Y. In the after table, country A has stopped producing Y and started to produce X. In country B, they had stopped producing X and started producing more of Y. Total world output is now 180. Therefore, specialization leads to an increase in world output. Absolute advantage. This is when a country is efficient at doing everything. In the before table, we can see country A produces 30 of X and 31 of Y. Country B produces 10 of X and 16 of Y. In terms of producing X, country A is better, and in terms of producing Y, country B is better. Country A, therefore, has an absolute advantage. Methods of protection. Methods of protection is a system imposed by a government to safeguard and keep track of the amount of imports flowing into a country. Types of method of protection include bans, negatives, quotas, red tape, quarantine, and tariffs. Why protection? Protection is needed for the following reasons. To protect infant industries who can't compete against international industries. To save local jobs. To prevent scarce foreign exchange from leaving the country. To promote local creativity and innovation.
The government budget. Budget. This is a fiscal measure used by a country to manage its revenue and expenditure over a given period of time. The fiscal measure used is called fiscal policy. Fiscal policy is the use of government spending and tax policies to alter national income. There are three types of fiscal policy. They are budget deficit policy, budget surplus policy, and balanced budget policy. Budget deficit. A deficit budget is when the amount of money a government is spending is greater than the amount of money flowing into a country. In other words, the government is spending more than it is earning. Sources of financing for a budget deficit is borrowing from the IMF, short-term loan less than 30 years. Borrowing from the World Bank, long-term loan more than 100 years. Borrowing from other countries, accepting grants, borrowing from private individuals, and draw down on reserves. Budget surplus policy. This is when the amount in which the government is spending is less than the amount flowing into a country. In short, the government is earning more than it is spending. Excess funds can be placed in pay back the IMF loan, pay back World Bank loan, pay back other countries, pay back private sector loans, give grants, and replace reserves. Balanced budget. This type of budget arises when the amount a government is spending is equal to the amount the government is earning. In short, the government is spending exactly what it has. This type of budget is the most efficient fiscal policy which requires less money for it. Advantages of a balanced budget: no loans to pay back, no interest to pay back, no room for corruption. Few countries in the world are currently running balanced budgets. These countries are China, Sweden, Taiwan, and Iraq. A number of countries in the world are currently running budget deficits. These are USA, Italy, Portugal, and Czech Republic. A number of countries in the world are currently running a budget surplus. These countries are Dubai, Saudi Arabia, Australia, and Denmark. Money. In economics, money has usually been defined as any general accepted medium of exchange. Characteristics of money: durability, portability, divisibility, recognizability, scarcity, Acceptability, homogeneity, legal tender. State must declare the commodity to be used for transaction. Functions of money. Unit of account. Money makes accounting system possible. Store of value. Money reduces the double coincidence of wants. Medium of exchange. Money facilitates transactions and means for deferring payment. Money makes the credit system and pay later possible.